Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of monthly demand and support. In fact, from here, all this previous rejection to the upside was created. Again here, the market tested its zone and rejected it to the upside. Again here, tested and rejected. Again here. And at the moment, the market just started testing this area once again. And what we could expect is a bit of a deeper test of the level, as already happened in the past. And then to see a rejection to the upside. We can also notice by zooming in closer that in approaching this support zone, the market is also creating this M pattern. And in general, after the creation of an M pattern, what we could expect is a rejection to the upside for the completion of the pattern of the neckline, which is the previous support turned resistance. So here on the monthly, we could expect a potential reversal higher for the completion of this pattern at the neckline, which is the previous support turned resistance here. Dropping down on the weekly time frame, what do we have? Now, from a weekly standpoint, we can see how the market has already started finding support at this zone. In fact, here, the market tested a level, found support, and started getting rejected to the upside. In a situation like this, where the market is once again approaching the zone, we could expect a potential double bottom to be created at this area. We can also notice that we just had a massive impulse to the downside without any kind of deep correction. So that increases the probabilities that we could see maybe just a bit of a lower low, because clearly many people started adding longs here. So probably their stop losses are below this low. So there is a high probability that the market will go and hunt those stop losses and only at that point create a move higher. Now, if you're asking yourself why these manipulations happen in the market, well, because for every buyer there needs to be a seller, and for every seller there needs to be a buyer. And sometimes institutions that want to buy simply do not have enough liquidity in the market at that specific moment to just trigger their orders. So they need to artificially create that liquidity by triggering stop losses, which in the case of a buy is simply a sell order. So if they trigger those stop losses, they create artificial selling pressure, which at that point they can use to fill their buy orders. Now, if we drop down on the daily time frame, what do we have? Now, here on the daily, first of all, I did speak about the GBPUSD a few days ago when the market was here, and I explained all the reasons for which we could expect this rejection to the downside, which is in fact exactly what the market just gave us. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. However, what we can notice is that from a daily perspective, we already had a first manipulation. We had here the impulse correction, lower low, rejection higher. There is the possibility that all this area here will actually be used as an institutional accumulation area, which at that point, if we do see institutional accumulation, so the accumulation of longs inside of this area, potentially also with the creation of a lower low below this previous low, at that point, that would definitely increase the probabilities of a potential rejection to the upside away from this support area that we have already identified on the monthly time frame. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data precisely for the pound, the first thing that we have to keep in mind is that if we're checking the data for the pound, we're actually already checking GBPUSD, because all currencies on the spot are traded against the USD. So if we're checking data for the pound, this is already GBPUSD, and what we can see is that with the last reports, net positions have been decreasing. That is true. However, we can also notice how now is the first time since actually more than a month that we start to see shorts getting closed instead of added. This means that institutions are losing their interest in their shorts, so essentially they're taking profits on all the move to the downside that just happened. So at this point, we could expect some potential institutional accumulation inside of this area happening, considering that they are already closing shorts. So we could start to see them adding longs, which at that point would definitely increase the probabilities of a potential move higher away from this area. So how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point, we could be looking for a potential move higher for the market to reject that monthly demand and support that we have identified at the beginning of the video. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the vet market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you scroll lower, you will see that even though there is still time to join, the time is starting to expire before price goes back to normal. So I really suggest to go and check it out as soon as possible. You also find the link in description. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.